Grow an actively managed portfolio of gold, silver, platinum, palladium, and rhodium with Auctus Metals today.
The sharks, they smell the blood in the water, that the physical precious metals or physical silver free float is dwindling, both at the LBMA and COMEX, and they are taking physical delivery.
Hello again, everyone, and welcome to another edition of the Auctus Edge, where we look to give that edge that precious metals investors are looking for. Eric Yeung from neighboring Hong Kong joins us today. Eric is in the precious metal space and has a vast network of sources in that space, and Eric will be sharing some of those insights with us today. Eric, welcome to the Auctus Edge. How are you doing?
I'm doing really well, Patrick. Thank you very much for inviting me to your show.
Glad to have you on. Anyone using Twitter or X or is in the precious metal space is going to come across your name as I did, but I think we've kind of X known each other for a while. And having said that, Eric, if you don't mind, could you tell the viewers a little bit about yourself?
So yeah, Patrick, I have been stacking physical metals, gold and silver, for a while now. And I initially started my X account to learn more about precious metals and the miners. And over time, I just developed a lot of connections with number of experts all over the world. And some people call me an expert, but essentially what I do is I take the best information and I understand it and I present it in a as simple manner as possible to the public.
Yeah, absolutely. And I think that's why your ex and your personality has grown so much. And but we're still waiting to see the real Eric one day, but we'll take that King Kong avatar. We'll take it for now. So all is good. Eric, I'd like to start with gold and the rise of gold that we have seen. Would you say this bull market for gold is this the typical commodity driven by normal market supply and demand and speculation, or is it monetarily driven?
I think, yeah, Patrick, you nailed it. I think what we're witnessing is it's both, right? It's a supply and demand market. It's also monetarily driven in the sense that I believe, and it's not only me saying it, but the mainstream media has finally agreed to what I've been saying and to what a lot of other people have been saying, which is the BRICS plus countries and the global South countries have, for a number of years, began to shift away from U.S. Treasury notes, bonds, and bills. I mean, the U.S. national debt is almost at $40 trillion and exponentially growing. Um, and then you have the U.S. and Europe freezing Russian assets in 2022 when the Russian special military operations began in Ukraine. So the rest of these, BRICS plus countries and global South countries looked at that and they thought to themselves, if we keep all our eggs in one basket, as in U.S. Treasury notes, bonds, and bills, the U.S. government or European countries can push a button and freeze or confiscate all our collateral, right? So I think what happened is, especially for the last couple of years, these BRICS plus global South countries have been looking for an alternative to the US Treasury collateral. And naturally, physical gold became the number one choice because, as you know, Patrick, physical gold is nobody else's liability.
I'll touch on the BRICS in a bit, but I just want to ask you one more question with the central banks. We know there's been quite a lot of central bank buying of gold, but just want to ask you, in your view and within your network, what is your take on the numbers regarding the gold buying that we are seeing reported from central banks?
Well, I think, that's a very good question, Patrick. I think they are lowballing. their actual purchases. I mean, it's not me saying it. Is Goldman Sachs is the major U.S. financial media finally admitting to that recently. I forgot exactly which mainstream media. I think it's either The Economist or Bloomberg or Reuters or all of the above. Okay, they essentially came out and said whatever we're seeing through the IMF numbers of central banks buying physical gold, double that or triple that. Because global central banks have no obligation to report exactly how much physical gold they buy. So whatever we're seeing, as you have sort of pointed out, Patrick, is what they are letting us see.
Yeah, it's a good point. Uh, Hong Kong, you are in Hong Kong, and it surely looks to being built up, or looks to be built up as a major trading hub, a major vaulting facility. Now, to me, it looks like in due time, London is going to have a challenged or diminished role in the gold or precious metals trade, as China will start to pull away power and control of London and the West's grip. But let me ask you, Eric, you are there. Why the buildup in Hong Kong, and is this what you are seeing or hearing as well?
Absolutely, Patrick. I think what's happening in Hong Kong is that China is looking at setting up a Shanghai Gold Exchange, physical gold and potentially silver vaults in Hong Kong, so that China can launch a physical gold product. Now, I don't know because they haven't announced the specifics yet, right? But so that China can launch a physical gold product in Hong Kong to potentially serve as a collateral for international trade, okay, down the road, like a repo collateral. So instead of using U.S. treasuries, countries such as Russia or India can use physical gold that is vaulted at the Shanghai Gold Exchange vault in Hong Kong, which is, as you know, in the banking industry, that's considered offshore to mainland China.
What role do you think this is going to play as far as the BRICS? Because when I spoke to a guy from the BRICS before, he's very well connected with the BRICS. He told me, we keep hearing about the BRICS unit, the gold backed BRICS unit, this and that, this and that. And what he had said was, it's not going to happen because the BRICS do not trust each other with who's going to hold the gold, or whatever that collateral behind the money would be. So I'm guessing maybe this is part of that it will have some tie to the BRICS as well, to have some kind of a clearly uh, transparent type of a system where all the BRICS can see.
I agree with your other guests completely. I don't think there's going to be a one BRICS currency to facilitate this. I think what's going to happen, and I give credit to Kathleen Tyson. She was, a Federal Reserve banker at the NY Fed. Okay, she explained this in detail as well. Um, so I think what's going to happen is that physical gold, in the form of maybe Shanghai Gold Exchange gold warrants, which is essentially just a ticket to withdraw your gold from a Shanghai Gold Exchange offshore vault, whether or not at from Hong Kong, from the Hong Kong SG vault, or in the future, maybe in Singapore or Saudi Arabia or like Dubai. I'm just, that's just speculation on my part that I think is going to happen. So whether or not at those places or in Hong Kong, that's just the collateral leg of the repo agreement. Okay. So if you understand repo, you have the collateral and then you have the currency, right? So the currency can be any currency. It can be Hong Kong dollars, US dollars. It can be like Singaporean dollars or Russian ruble, whatever you want. So I think that would work a lot better than a centralized BRICS currency where that somebody can attack, right? A hacker or like the US can attack that currency, like the way that sometimes they attack the euro, right? Or, or the Japanese yen. So I think, a physical gold collateral and multipolar currency arrangement would work much better. And that's the direction that I see that they're taking this.
Yeah, that's a great point because I think that's one reason why they call gold the neutral reserve asset. It's not tied into any sovereign currency. And but I'm curious also because I did have the chance to speak with Judy Shelton about a year ago or a little less ago. Do you think the maybe the US plan to offset this is where they're thinking of that gold backed US Treasury?
Well, absolutely. I talked to Judy. I mean, I think I talked to her about the U.S. Treasury gold bond that she proposed. I think the duration that she's looking at is 50 years, if they can get away with it, right? 50 years. So my feedback after much deep thought into it, I think what it is, Patrick, and it's probably you probably know this already. It's essentially just a gold deferral payment. So think about this. There's sucking liquidity, whatever, currency that people want to buy the gold with, US dollars, Chinese RMB, into this, or with this product, it has to be US dollars, right? Because it's a US treasury bond denominated in physical gold in terms of its principal. So it's essentially just sucking US dollar liquidity in a defer payments of physical gold for 50 years. You see how that is? So let's say I'm a institution. I want to buy physical gold. There's an option to buy this 50-year gold bond all of a sudden. So instead of buying the gold from the spot market, which may, probably push up the gold price because you're taking gold off the market, you're buying a piece of paper that is telling you that it'll give you back the gold in 50 years. So you see how that you know basically reduces the pressure of physical gold demand right now, and essentially reduces the pressure for the physical gold price to go up right now. That's what it is. And when I said it, and I mean, even Judy said it, right? Judy said this, this U.S. Treasury gold bond proposal is essentially a U.S. Treasury bond and a gold futures contract combined in one. So she agreed to that.
She's a very interesting person to talk to, and she does have quite a bit of insight. So, we'll see how what she said. We'll see how that unfolds. And another thing I think we're all looking at to see how it's going to unfold is all over the news, at least on X or the Twitter sphere, X sphere, whatever you want to call it, where J.P. Morgan moving their New York trading desk to Singapore. And yes, I am in Singapore, but no matter how much chicken rice or chili crab I offer people, nobody is willing to talk. No one is talking. So I ask you, what are you hearing about the J.P. Morgan move, or at least your thoughts on it?
Okay, so Bill Still, American journalist, well known, he broke the story, and he's pretty reputable in the U.S. Has been in this game for decades. That's number one. Martin Armstrong, another U.S. economist, confirmed that story from his independent sources just yesterday on Capital Cosm. And I have two anonymous sources of my own, pretty senior people who confirmed that this is true. Although one of them said that it might not be the entire team that moved to from New York to Singapore, maybe half, etc. Right? So all in all, I think it makes sense that if JP Morgan is not moving the entire team, they're moving a portion of the team from Gold Desk from New York to Singapore, because the action, like where a lot of this physical metals is trading, is happening in the East at the Shanghai Gold Exchange in Singapore, and soon to be in Hong Kong. As a matter of fact, somebody again, didn't show his face or name, but this makes sense. Told me recently that some of the gold in Hong Kong is moving to Singapore. Why? Because Hong Kong right now, the Hong Kong Gold Exchange does not offer a leasing service. Okay, so if you're if you're not, let's say if you're not a sovereign, I don't know, South Korea, Middle Eastern country, Russia, who don't really care about you know generating a yield on their physical gold for a short duration, because I'm sure that the Hong Kong Gold Exchange is working on that, like I explained before, right? They want to establish that, and they already did it. Shanghai Gold Exchange vaults in Hong Kong and offer more products. But as of right now, they don't have leasing. So if you're a small entity, you want to generate some yield, you move that gold to Singapore. And who want to, who would be, who would have enough incentive to suck physical gold away from China? To their own facility, or just away from China in general, right? That would be Uncle Sam, would be JP Morgan, right? So it makes sense that they, send some people to Singapore to facilitate this process. It's just like my entire, thought process and logic and the story I just given you makes sense.
So I guess it could be JP Morgan coming here to set up the facility to handle leasing arrangements.
Correct. That's what I think is happening. Like for that, at least like for the obvious reasons that we see at the moment.
All right, we'll see how that one goes too. Maybe I need to offer something else besides chicken rice and chili crab, and then maybe someone will finally tell me. But the other week, Eric, we saw COMEX where the silver froze for some time, and of course, speculation ran wild, and fair enough because that's exactly what's going to happen. But tell me, because I know you've looked at this more than I have, but can you tell me what is going on with COMEX in your view? Are we back to this whole Shanghai Futures Exchange and everything else again?
I think you nailed it, Patrick. I think what's happening, showed you a chart earlier today that you can share with the audience. I think what's happening is that the Shanghai Gold Exchange, and now India as well, uh, draining physical gold and silver, especially silver at the moment, from the LBMA. And as you pointed out on X earlier, ICBC, which is the Industrial Commercial Bank of China, is a member of the London Precious Metals Clearing Limited. Okay, so they, like, that organization, facilitate the clearing of all the bilateral contracts, for the local London gold and silver trade. So anyway, back to our story. Yes, China and India are draining that metal from the LBMA. So what is happening? Well, the LBMA was getting metal from the COMEX. So I think what happened last Friday was that it's a combination of entities standing for physical delivery at the COMEX, which is well documented. It's pretty crazy. I don't have the exact figures in front of me right now, but December is a delivery month at the COMEX, as we both know, for both gold and silver. So I think huge amount of contracts are standing for physical delivery at the COMEX. And reports came out of China that and other people are reporting it now, but I think I broke the story on Friday last week that an entity stood for delivery of 400 million troy ounces of physical silver. So whether or not, is standing for delivery or the placing of an order, I'm not sure, because these are rumors, right? But other people are reporting it right now. There are reports coming out of China saying that this in fact happened. via a Chinese or a number of Chinese state-owned, gold and silver bullion dealers through their proxies in the West and spread out across the LBMA and COMEX, because some people pointed out there's not enough metal at the COMEX to fulfill this, right? So I think it's spread out both, at the at London and New York, right? But another thing that's interesting that came out since Friday is that Bob Coleman on a in an interview said that it's rumored that Paul Tudor Jones, this is a billionaire in the US, placed some rather large uh positions or longs at the COMEX. Not only, of course, not only like straight futures, but also at the options market. So I think that also makes sense. I know that there are position size limits at the COMEX, but if you spread it out, futures and options, and if you use multiple proxy entities, a person as resourceful as Paul Tudor Jones can potentially do that. So anyway, I went on and on. I think what we're seeing here, Patrick, is just simply the sharks smell the blood in the water. That the physical precious metals or physical silver free float is dwindling at both at the LBMA and COMEX, and they are taking physical delivery. I think that's what's happening.
Yeah, I gotta admit, when this story first broke, especially when the exchange shut down for a while, it did, and we talked about this a little bit earlier. It did remind me of nickel and the London Metals Exchange when there was a billionaire. He was basically, going to lose large, but it ended up being Tsingshan that pretty much pulled a lot of the silver off nickel, I should say, off the market. And but when the exchange opened up, nickel fell about half its price. But at least this time we we didn't see silver fall half its price. So a little bit of a different situation, but it does show how these big orders can surely stop the exchanges in their tracks. But besides Paul Tudor Jones, someone else came up, or something else, another country came up, was South Korea, who I believe bought, and but they're taking delivery from, or I think want delivery from Shanghai instead, not COMEX.
Correct. It's reported potentially. Now this is still in the air because although multiple people are reporting this now, we're still waiting for mainstream media to catch up and tell us what the exact figure is, right? Anyway, so it's rumored that South Korea may have potentially bought 1,000 or 2,000 metric tons of physical silver from the SGE, which is the Shanghai Gold Exchange. But you got to remember, right, as I just told you, Patrick, right? When the Shanghai Gold Exchange is running out of silver, where do they go to? They go to London. So it's like kind of all connected, right? They trade in London. And that's why I think this situation is going to persist, because like my friend PM Buck, he's another really great account on X. He pointed out, and he did all the calculations from all the supposed inventory of physical silver from all the major exchanges minus what the ETFs hold. He came out with a number that this is 2 weeks ago, so it's probably slightly lower or a lot lower at this point. 20,000 tons across the entire world of physical free floating silver. And that's tiny, Patrick. That's only like at $50 US per troy ounce of silver. That's $36.8 billion. Can you imagine that? I know, I know. I I feel the same when I heard that figure. I mean, a couple billionaires can buy the entire thing. So we're probably down to 15,000 metric tons at this point. It's kind of ridiculous.
Yeah, that's another great point, because from what I'm getting, and again, I'm just like everyone else here, trying to put the pieces together. We're on the outside looking in some cases, but What I'm getting is we may be getting pretty close to just one or two or three big players, big buyers of silver that could quote unquote break the exchanges. What's your feeling or take on this?
I think it absolutely can happen. I mean, one of my Twitter or X buddies, his name is David Bateman. He's a billionaire. He posted publicly. I mean, the guy already bought you know probably 1,000 tons of physical silver back when silver was around 40 dollars US, or less than that, a bit less than that. But he announced that, right? Like back then. He recently, I think yesterday, announced that he's going to buy more. So that's one billionaire right there. That is publicly announcing that. And then you have Paul Tudor Jones, and then you might have people like Jeffrey Gundelock, like who have said in the past that he liked gold, and people like Michael Burry, Dr. Michael Burry, recently, supposedly, one of the few interviews that he did in the last 15 years, he admitted that he has been long gold since 2005. So all these people with a lot of money can pile into physical gold and silver. So in terms of physical silver, how much do we have? Like I said, $36.8 billion 2 weeks ago. That's that can be gone within, I don't know, like 3 months.
Yeah, it's getting I mean, I think everyone in the silver space knows that the market has been getting kind of tight. We see the numbers from the Silver Institute. I think we've been short for the past 4 years in a row. If these numbers are truly reliable, we have been short past few years. But let me take a few steps back. Why silver? Why are people buying silver?
Well, Patrick, because silver is a critical industrial metal. I mean, I wrote something on my X account, so you probably seen it. I said the price appreciation of silver from this point on, or even before that, right, all the way back when it was $20 or $15 to $100. So whenever we started to $100, that price appreciation is due to two factors. Number one, like you said, the mining deficit year after year. Number two, humongous and elastic industrial demand, such as as you probably know, Patrick, the solar panels. I mean, the BRICS countries, they're building more and more solar panels because they want to reduce the reliance on carbon-based fuels like oil, right? So they want to build more solar panels. And what do solar panels use? Silver, right? Silver. And then what else are they doing? They're building a lot of electric vehicles like China, right? If you go to China right now, Patrick, you'll be shocked because there used to be so much pollution. You land at the Shanghai International Airport, you walk out, it's like a wall of pollution, a wall of like just black smoke hitting you. Now it feels like you are at a Thailand beach. Okay, that's how clean the air is. You see, there's like electric vehicles everywhere, right? And again, of course, China is trying to lessen its dependence on fossil fuels, on hydrocarbon fuels, right, like oil. And and again, electric vehicles use a lot of silver, right? So so these are an elastic, demands on physical silver. And you also have the military industrial complex. So somebody said, I don't know if it's true, but they said cruise missile has around 10 kilograms of silver in it. Maybe not that much, maybe a couple kilograms, but But with all the wars going on all over the world, the militaries in the world are using a lot of silver. So all of the above are inelastic silver demands. And then what happens after the silver is used on these applications? When they get old, they get thrown out. Because silver is so cheap, it's not even worth it for the silver to be recycled. Okay? So that's the problem that we're in right now.
Yeah, I remember. I forgot who it was, but in my head, mentally, I just thought of it as a monster box of missile, something like that, close to it. So, yeah, the thing with silver is it's really not recovered the way gold is. So, supply is not keeping up, demand is outpacing supply, and a lot of it is just thrown away. It's not like gold in that case. But let me ask you though, where are we going from here? Meaning, gold's rise is a monetary rise, monetary demand. Silver's rise is, let's just say, monetary and industrial, So one would say momentum. Momentum is there, and two, what could possibly stop it?
I don't think anything can stop it, Patrick, other than maybe a US dollar liquidity implosion, like a lot of people are predicting, right? Let's say, the tech bubble pops, and then you have the leveraging events where, the US dollar liquidity gets squeezed, it contracts quickly. So in that scenario, I see everything falling, including the US dollar price of gold and silver. But other than that, Patrick, I think I don't think they can reliquify the physical gold and silver free float unless the price of both physical gold and silver go up substantially higher. In the case of silver, I think I don't even think it will reliquify that free float until it's beyond $100 US per troy ounce.
Okay, two last questions here. One being, if you don't mind, could you explain the free floats for people to catch up on?
Oh, the free float is just simply physical gold and silver that is available for delivery at the spot market. So let's say me and you, Patrick, we are authorized participants, and we go to the COMEX and we say, hey, it's December delivery month. We want like physical gold or silver. They don't tell us, hey guys, just cash to settle. They don't do that. They just give us the physical gold and silver. That physical gold and silver are the free floats because it's readily available to be delivered and withdrawn from the exchange.
Okay, last question here, and I'm just going to throw this out because we talk liquidity. I'm seeing the repo market starting to pick up again, and the repo market is a place where the Fed injects liquidity back into the system for banks. You see you see anything going on with the repo market that has caught your attention yet, or don't worry about it yet?
Very good question, Patrick. I see that there's a activity at the standard repo facility. Okay, so if the audience don't know what that is where entities within the US can withdraw US dollar liquidity from the Federal Reserve. Okay, so it's what they call SRF window where they can withdraw US dollar liquidity. So that means, Patrick, that the liquidity is probably tight in the US. But then again, the SRF facility did not exist back in 2019 when they had that repo crisis, right? So now the US commercial banks have this window where they can directly borrow from the Fed instead from each other. Okay. So I don't know because I agree with Kathleen Tyson on this subject because she said that this is a viable source of liquidity. But then there are other people on X who say the SRF is a nothing burger. They're still going to implode. So there are two schools of thoughts here, right? One camp says that the SRF may alleviate the situation the liquidity tightness of US dollars. Another camp is telling me that it's not going to do much. It's a nothing burger. We are very close to US dollar liquidity implosions.
Okay, well, a lot of this was a little bit of a different type of interview because there's just so many things going on right now, and speculation, yes, of course, but I think it's something where we need to start trying to taking a look at all the different pieces here and build together our picture, because a lot of these things, by the time we know it all, it's going to be too late. So, Eric Yeung, I want to thank you for your time and sharing your insights with us from your networks, from your connections. And before we wrap up, can you let the good people out there know how they can follow you?
They can follow me, Patrick, on X at King Kong 9888. So that's my account on X, and it's also my account on Reddit in China is the same handle. So at King Kong 9888.
All right, Eric, I want to thank you for your time. I mean, I think you've given us a lot to think about, and I hope we can do it again soon, and we'll see you on X.
Thank you, Patrick. My pleasure.
That was Eric Yeung giving you the edge on the silver flows we need to know. Follow him on Twitter or X at King Kong 9888. And if you want more precious metals insights and would like to know about optimizing your precious metals portfolio, visit us at www.auctusmetals.com. Please do subscribe to our YouTube channel and give this video a thumbs up.